Today we're going to be talking about Marathon Petroleum Company. They're part of the S&P 500. They operate in a few different segments: refining and marketing, midstream. They also do some retail as well. It's pretty minor. Marathon Petroleum was founded in 1887. They're based out of Findlay, Ohio. Like I said, part of the S&P 500, large cap stock. So I'm looking here through this little screener that I built for intrinsic value. Looks pretty good. Suggesting buy around $150. It's trading at 109. So that's nice. Again, take it with a grain of salt. I went ahead and I wanted to run through a Fidelity stock screener, just looking for key statistics. I looked at PEG ratio, dividend rate, price earnings, price per book, 10-year annual return. So this isn't going to match totally what we're seeing on the screen. This is, I just wanted you guys to see what I was seeing. So the PEG ratio is 0.04. You want less than 1. Dividends at 2.83%, which is about $3 a year. Price earnings is at 3.3. Really, obviously you want below 20, and so the average for the industry is 5. So 3.3 is pretty good. Price per book is 1.69. You want less than 2.5 as well on that, so doing good. 10-year average return was 13.38%, which I think is pretty good. So obviously we want to look at who their competition is. Again, just showing some of the financials if you wanted to look at that. They have to compete with companies like Exxon, Phillips 66, Chevron, Valero, pretty big companies. They produce a lot of their own oil. They pull it from the ground. Marathon does not do that. They mostly focus on purchasing it, refining it, marketing it, and then shipping it. So a little bit different business model. One of the big highlights I noticed in the annual report was that the board's approved $8.3 billion in share repurchases. So that's going to be a good thing for shareholders if that can, come about. Some of the other things that I wanted to note was that the earnings per share was $33 a share, and the average for the industry was 11. Their earning per share 5-year average is 16.77. Whereas the industry was 22, and their earning per share growth for the trailing 12 month was 668% compared to 124%. So again, they operate in two main segments: refining and marketing, as well as midstream. Something I was showing there on the screen, I'm going to come back to that, is the net capital calculation. So that really discounts all of those current assets to see at a 30%, discount is a good buy. Obviously, this is not a net stock. That would be kind of cigarette butt investing. Regardless, kind of going through here on their refining and marketing, they do renewable diesel, which I thought was pretty cool. They also do a lot of liquefied natural gas, which was a big deal after the whole Russia thing started, and Russia cut off some of those pipelines. Europe needed a lot of liquefied natural gas to keep the lights on. So a company like Marathon obviously was going to benefit in that situation. Here, the thing I'm scrolling around on the screen was getting to the 10K, which is the annual report. Just wanted to show how pretty much anybody can find these SEC filings. You can find them through Yahoo Finance. You can even just go to the sec.gov webpage. That's going to help you as well. You can download these, you can look through them. It's going to tell you anything you want to know about the company, what their risk factors are, what their auditors have said, how management is approaching certain things. Also going to give you your financial statements in more detail with footnotes. The other big thing in their business model is their midstream. They do logistics, pipelines, terminals, and they have the largest private fleet of barges. Of course, if they get too much foreign investment, they're subject to maritime laws, the Shipping Act of 1916, the Merchant Marine Act of 1920. So something they got to navigate there. They also have to upkeep a lot of leases. They got to deal with things like OPEC plus capping oil production. They've got a lot of climate change related litigations. They've got 15 from 2017 to 2021. So something to kind of look out for. That can impact these kinds of companies a lot. They also have a master partnership called MPLX. It's mostly holding most of their debt. So something to look at when you're looking at a company is how are they structured? Where is the debt, the assets, all of that stuff actually sitting at, and what are the risks to those? The big thing in the audit report was just how the goodwill impairment was being done. So regardless, I mean, looking through this, it does look like a good value stock. It's just whether the market eventually realizes that value.